Our next guest is trying to gauge how intense the market impact from the coronavirus is going to be. Joining us now is Jim Keenan. Jim Keenan, Chief Investment Officer and Global Co-Head of Credit at BlackRock. I think I get a lot of your mail sometimes, Jim. I get a lot of stuff addressed to Joe Keenan here. It's pretty close. Jim, thank you for joining us. You point out that three things are going to shape what happens in terms of the coronavirus impact on the markets. And obviously, number one is scientific and medical data, but 2 and 3 are fiscal policy and monetary policy. So in your view, have we done a pretty good job on the latter two and are now but just need to be more focused on the first, on the former?
Yeah, I think obviously the in the last 2 weeks, the size and magnitude that you've seen the moves, not just with the U.S., but globally speaking, to try to reduce some of the systemic risk in the system has played out. And you've seen some recovery in the assets there. But as you point out, I think over the next 3, 6, 9 months, we're going to be dealing with the uncertainty and around the virus and the shape of that virus, and what fiscal response is going to be to bridge the architecture of the economy, but also re-stimulate on the back end. And that's going to be different by region and by industry to restart this economy.
You do point out one positive, I guess, is that the overhang and leverage in the leveraged finance market are much lower now than in the 2008 financial crisis. So you think it's possible that the market's ability in certain areas to recover might be greater than it was 12 years ago?
Yeah, well, I think it's going to play out differently than 12 years ago. I think the issues are different. Obviously, we're to go through a severe economic downturn here. It's one of these odd dynamics that in order to reduce the humanitarian crisis, we have to actually shut down economic activity further. So leverage in the short term is going to look significantly higher as you see this pretty significant earnings hit. I think what you'll see right now, and you've started to see this post the U.S. Fed stepping in and the Government CARES Act, is you started to see the markets open back up to try to provide liquidity to companies to try to withstand this volatile period of time or the drawdown in earnings over the course of the next 12 months. And last month alone, just as bad as it was, the highest investment grade issuance that we've seen, about $260 billion of issuance.